Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, July 17th at about 3:45 p.m. Eastern. Well, the S&P 500 edged higher in choppy trading today as investors juggled between prospects of more fiscal stimulus and fears of further business disruptions due to another record-breaking rise in COVID-19 cases across the country. The S&P 500 and the Dow are set to close the week higher as optimism over an eventual coronavirus vaccine and hopes of a post-pandemic economic recovery are helping investors look past a continuous surge in COVID-19 cases. The United States witnessed 77,000 new infections on yesterday. And by the way, as we go through our program today, if you hear some thunder in the background, I live in Sarasota, Florida. We're experiencing a very loud thunderstorm right now, and goodness knows how long goodness knows how long it's going to last. So bear with me. Okay, let's go on to our next chart. As we always do, we're going to start with a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund, of course, that follows our benchmark, S&P 500 index. Now, when I captured this chart today, the SPY, you can see it over here, right near the close, was trading at $322.38. That's about $32.23 on the S&P 500 itself. Now, the good news is the SPY has stayed above the red line, the 20-day moving average, the green 50-day moving average, and the black 200-day moving average for quite some time. Actually, though, since about July 11th, the SPY has been mainly consolidating. Did move up here just, if I said July 11th, I meant June 11th. Since back here, since about June 11th, it's been consolidating or trading in a range even. Definitely consolidating in the last 10 days of trading, walking right along the 20-day moving average. Now you can tell here that it wants to pop higher the last 3 days of trading. It's really wanted to, but of course we keep getting more reports of rising COVID-19 cases, so that the sellers are pushing it down, the buyers are pushing it up. It's turning into a gigantic pressure cooker here, and we're going to have to see what happens. Now, we did note last week that the 50-day did cross above the 200-day. These are all simple moving averages, by the way. That's known as a golden cross, and that's usually a very positive sign for the market when the 50 crosses above the 200. But right now, again, the sellers are holding it down, the buyers are holding it up, and we're going to have to see who wins. We're still about 7% off of our all-time closing highs that were back here in February at 338.34 on the SPY. Not a lot going on here. Now, we are going into more deeply. We're going to do a deep dive into second quarter earnings season starting in this next week. The banks announced this past week, and in the coming week we'll take a deeper dive into the second quarter earnings season. So it could conceivably continue to consolidate. Obviously, stocks move up, down, and sideways, so it could break out higher on good earnings, break lower on tired earnings, or depending on what the COVID news is. So either way, please trade wisely and check your protective stops on all your open positions. Our next chart is the Invesco QQQ. Of course, this is the Nasdaq 100 ETF. Its holdings, of course, are all the top large cap momentum stocks and tech leaders. Now, the QQQ, the all-time closing high on this was very recent. On July 10th, it closed at $263.97, which is a new all-time closing high. Why do we say closing high instead of intraday high? And we can if we want. That's because the close is where the commitment comes in. When traders or investors are willing to hold something overnight, that's commitment. If they are not willing to, like look at this red candle where it went all the way up to about 270 and then fell back down and closed down here. There was no, yes, it rose up that high on that day, but there was no commitment there, and the sellers were able to push it down before the close. So that's why we talk about closing highs. They're more important in a way than just intraday highs for sure. So now, when we got this past all-time closing high, Amazon and Microsoft were making new all-time highs. Since then, those two stocks have pulled back a little bit. Netflix was down today on low earnings. And so the Nasdaq has been up and done an incredible job for a long time, but now it looks like it needs a rest. And we can see some traders pulling out of the high-tech momentum stocks and moving toward more value. And we'll talk about that with our next chart. So we do have resistance up here at 270 and 264. We have support at the 20-day moving average, potential support I should say, at 253.13. And again, when I captured this chart today, the Qs were trading at $259.64. So we've got this rising 20-day moving average, very nice. We're still in a great uptrend here, still positive. We've got the 50-day moving average rising underneath, picture perfect, couldn't be better, and the 200-day moving average down here at 214. Summer usually has very low volume. Today, the QQQ traded almost 30 million shares, which is average for this time of year. So with earnings season coming up, we're going to get more news about COVID-19 next week. Please mind your stops and please trade wisely. And now talking about maybe swinging a little bit out of tech stocks and into value stocks. This is kind of a hybrid. Right now we're looking at a daily chart of the iShares U.S. Telecommunications ETF, the IYZ. Now, the IYZ has 44 holdings. The top holdings are Verizon, AT&T, T-Mobile, Garmin, Cisco, and Motorola. Now, you can't see it on this chart, but the IYZ did make an all-time closing high on December 17th, and that would be way back there, of course, at about $36.74. Now, today when I captured this chart of the IYZ, it was trading at $28.28. It's bucking up here, as you can see, into the 200-day moving average, which is currently acting as a mini ceiling here. We have the 20-day below very nicely coming in at 27.58, and actually the 50-day, the green line, is coming in a teeny bit higher than the 20-day at 27.65. Not enough to matter. We have the RSI here, the 14-day RSI, trending higher nicely. The MACD is totally sideways. That's more of a lagging indicator. So what we have here is we see that the IYZ came down from February highs here, and of course fell with everything and everybody else down to these lows on March 23rd. Then started up here. Look at the inverse head and shoulders. That's a nice pattern. Inverse head and shoulders here. That's a bottom reversal pattern that I've always liked. So it burst up through that, jumped up above the shoulder line. Of course, that's inverse with the head down here and the shoulders on either side. Then kind of meandered along around its 20-day moving average, fell below it recently, and then started up again. Again, trading today and closing near $28.28. Now, my thought here is it's been consolidating basically from April, rising very slowly, getting a higher low here. That's a good thing, right? And we got it coming down here. Let's see, we're going to have to use, well, we could use this if we want to. This will come straight across. So we've got kind of a rising pennant situation here now. We've got pressure from the sellers obviously coming down and buyers coming up. This is more known as a value ETF, and my thoughts are telecom stocks typically pay very good dividends. And with interest rates at incredible lows, that makes telecom stocks attractive to investors, certainly myself included. Plus, telecoms are known to be a good place to hide out during earnings season. And then this earnings season could be dicey. We've got to face reality at some point. Plus, in this particular ETF, you get exposure to 5G stocks, which of course are all the rage right now. So that's my line of thinking. If the market can stay relatively positive and stable in the coming week, and if the IYZ can climb over the 200-day moving average, which is now coming in at $28.33, and let's say it goes up to $28.50 and stays over that 200-day moving average, then in the coming week I may add shares of the IYZ to my trading portfolio. My initial stop is going to be down here at 27.30, fairly tight stop. And if the IYZ can head up toward 29, I will raise my stop to a trailing stop and probably add more shares to my position. So with all that in mind, you may want to keep an eye on the IYZ in the coming week. And now, before we go on to final thoughts, please know that for a limited time only, we are offering all of my popular training programs at a 20% discount. This is a brand new offer. So if you want to discover my simple yet powerful strategies that will help you increase your gains quickly and easily, please go to the link on this screen or simply click on the orange button below. And that way you can check it out. And now for some final thoughts. All of us as traders, we all know the word responsibility, and sometimes when we hear it, we tend to groan, oh, that's your responsibility, and we feel, or if somebody says, take responsibility for your actions, sometimes we feel like a weight is being laid on our shoulders. However, we have to think of this as traders and investors, our first responsibility is to our capital. And as you've heard me probably say over and over again, protect your capital at all times. That is your first responsibility. Now, to add to that point, how is your ability to respond, your responsibility, how is your ability to respond to the market each morning or each time you begin to enter a trade? In other words, what is your responsibility? Now, if you had intended to enter long positions when you first look at the market, but the market's headed lower, perhaps you respond by setting those trades aside for now. Or if the market is headed higher, maybe you respond by entering new trades that still have good setups, meaning you're not chasing the trade, it's still a good setup. And once you're in, you respond by immediately setting your protective stop. A hard stop with your broker is great, or at least you write down the stop that you're going to adhere to. You can also respond to current positions to see if any of them are touching your target price. And maybe if they're overbought, maybe you respond by taking at least partial profits and then raise your stop on your remaining shares. So take a few minutes each day to review your ability to respond to the market environment, to respond to any new trades you want to enter, and to respond to the risk-reward management that you have in place. Remember, when you sharpen your ability to respond, you are strengthening a skill set that will add dramatically in your trading success. And speaking of success, please remember that if you want to become a consistently winning trader, please check out our 20% off sale on our simple yet powerful online trading programs that will help you increase your trading profits from now on. Just to check it out, click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.